Good morning. Welcome to Trading Hour. It just doesn't feel festive. It feels so festive outside in the office in the way you're feeling. But when you look at the markets right now, it's just not the picture you imagine, right? In the morning, you woke up, you had positive global cues. We had a bit of a gap up opening. And now as we speak, 150 points gone on the Nifty. The Sensex is down close to about 450 points. Banks are holding up. But again, not by a whole lot. They've come off too and just up close to about 0.3%. And the advanced decline ratio is firmly in favor of the number of stocks which are weak. So we've got about a 1:2 in terms of the advanced decline ratio. Hi.
Hey, Reema. And you know, yesterday when there was this rally, maybe the expectation somewhere was till Diwali that could continue because of the festive feels. But yesterday there's a big profit booking again that we are seeing. And the mid-cap index, it is at the day's low. In just last couple of minutes, we have seen that the advanced decline ratio has worsened in favor of the declines, and it is down around 500 points. Bank Nifty is lending support again. So a lot of banking results which are coming through, and we do have very stock-specific moves today. The Nifty Bank is up 0.4%. It's the PSU banking index which is lending support yet again. So a lot that is happening in the broader markets as well, and we'll keep discussing that, and we'll talk about result reviews and result reactions as well. For now, if we talk about the top gainers, it's the Nifty CPSE index which is up around 0.4%. But on the flip side, we have the Nifty Pharma Index, which is down around 2%. The Nifty Auto Index is down 2% as well. And it is followed by the Consumption and Metals Index. So let's start the show by focusing on some earnings as well. And we'll talk about a lot of numbers. The first one that we are talking about is Spandana Spurti. It's under pressure after reporting its Q2 numbers. Abhishek is here to tell us more.
Well, microfinance pain has come in for Spandana Spurti, and they have reported a net loss after a long time. So AM growth is down by 10% on a sequential basis. The NI is down as 5% on a sequential basis. Operating profits have declined 9.3% YOY and about 19% sequentially. Look at their provisions that spiked up to 492 crore versus 86.5 crore in the same quarter last year, and about 200 odd crores in the previous quarter. So quarter on quarter, there is a almost 2.5 rise in the provisions as well. Asset quality deteriorated massively. Gross NPA, net NPA in absolute value are more than 60% up on a sequential basis. Gross NPA ratio is at 4.86% versus 2.6% in the previous quarter, and the return ratios, that is ROA and ROE, have turned massively negative this time around. ROA of -7% and ROE of -23.1%. Back to you.
Okay, thank you very much for that. Let's move on and talk about Welspun now. The company reported a healthy revenue growth of about 15%, but the margins were a bit muted. The home textile business has recorded strong growth. So to talk more about the second quarter earnings, we have with us Dipali Goenka, the CEO and MD of the company. Dipali, thank you very much for joining in, and season's greetings to you. You look absolutely fantastic. So let's talk about the numbers and the way forward and how demand is shaping up. So you've clocked in a healthy growth of about 15%. Can this run rate continue in Q3, Q4? What's the visibility that you have? And is there scope to revise your guidance?
So let me give you a perspective, first of all. I think this quarter actually recorded one of the highest ever top lines we've ever done, around 2,936 crores, which has been up 15.5% year on year. Yes, our EBITDAs were a little soft comparatively. However, in absolute terms, we have still shown a growth in that number as well. But so when you talk about the numbers, we continue to maintain the growth of around 10 to 12% annually, and an EBITDA of around 15 to 15.5%. And that's going to be what we'll continue to target and focus on. This year, actually, this quarter has been a very interesting one for us, because I think the Red Sea and the geopolitical issues played their little part here. Because, let us also say that the Q4 of our retailers and Q3 of ours actually is the holiday season. So we were time bound. So we had to get all the inventories that we could possibly get for containers and ships. I had to also make inventory and keep it in the warehouse. So, our working capital was also a little stretched this time, and we had to hold on inventory because we were completely time bound for our dispatches as well. Looking at India, I think India is at a sweet spot, completely an integral part of the supply chain and strategy for a lot of our global partners. So yes, one of the stable democracies. So I hold India as the bright spot for all of us.
Okay, Ms. Goenka, so India is the bright spot. Let's talk about North America because that's a big market for you, right? We've gotten some mixed commentary coming in while Walmart increased or raised their targets for FY25. Home Depot said that maybe consumers are pulling back in terms of consumption and their spending as well. What are the demand trends currently that you're seeing in that market?
So, it's a mixed report that you will see coming in. And if I talk about the Q3 numbers or Q4 numbers for our retailers for the holiday season, they are actually targeting around 3.4% of growth. We saw the Fed rate cuts happening in September. That actually cooled off the inflation. It's going to be a mixed one. Let me be also very, very clear. However, for us as India, it is an opportunity. While the sales could be the way it is, but we still see a 3.4% growth in the consumer spending that comes in owing to on the back of the the holiday season. So yes, that's where it is. So let's see how it pans out, but we are pretty cautiously optimistic on that.
Dipali, the branded business has done very well for you. It's about 15% of your revenues, and in Q2 it went up by 45%. What would be the revenue contribution? Sorry. What will be the revenue contribution of branded going forward, say by the end of 2 years? What are the margins that you enjoy on branded? And what led to, even talking about margins, you acknowledged margins were muted. What were the key reasons for that?
So let me come back. Let me first start with the margins being muted. And I actually, as I touched on it earlier, I said that because owing to the Red Sea and the geopolitical issues and because of the holiday season right around the corner, we had to hold on inventories at our warehouses. We had to look at the inventory availability for our, ships and containers was not there. So we really were struggling with that. And hence that got impacted, Now, let me come to our branded business, as you spoke about. We actually call it our emerging businesses. Overall, actually, it contributed around it grew 22%. It contributed around 33% of our top line. And of course, our branded business, that is, our licensed brands, they definitely are healthy in the terms of margins. But a domestic consumer business, which is our India brand, Spaces and Wellspun, it grew around 10%. We feel this could be a great opportunity. Our Wellspun brand grew at around 20% this time, and Spaces continue to, overperform in the modern trade. So definitely for us as Wellspun, while we talk about a B2B, which will continue to take the market share, not only in America, but UK and Europe and rest of the world, but India. India is a story where you see a big consumption story. I mean, these 2 quarters is not the way of looking at India's story. Let's look at the next 2 years, and we are very positive about that. And we are looking at maintaining that growth there.
That, of course, is also something that we are tracking because even in India, consumption growth in festive season hasn't been as good as we've seen in the last couple of years. Ms. Goenka, flooring is around 8% of your business. It's not that big a part, but it has grown well in the last couple of years. But this time around, it's just a 3% growth. What's the outlook? What is the second half growth that you're expecting? And will margins stay around that 8 to 9% mark here?
So flooring, you're absolutely right, had grown and has been a little soft this quarter. Again, in these flooring shipments that we give, we actually ship out. They basically are DDP or CIF, and as a result, the impact comes on our customers. So they have actually postponed their shipments for the next quarter. While we continue to grow our businesses in the terms of, reaching out to marquee clients, OEMs in America, Australia, and New Zealand. But also, let me tell you, our flooring business in India has seen a 28% jump. And it'll have a double-digit growth here too. So overarchingly, we feel pretty positive about our flooring business. It is only, and I always feel that let's look at the strategy. The strategy remains intact. Our goal towards achieving, the growth absolutely remains intact. And the India story on flooring, because let me also, that we have the most modern plant in this part of the world. And it is also getting indigenized to 80%. So we feel very positive about it.
Okay. All right, Ms. Goyanka, thank you so much for joining in today, and festive greetings to you and everyone at Wellspin Living. That's the word coming in from the company. They maintain their revenue growth guidance and the margin band that they had spoken about earlier as well. We'll slip into a break. Up next, we'll discuss the second quarter earnings of LG Balakrishnan Bros with B. Vijay Kumar, the chairman and managing director of the company. Stay tuned for that.
Welcome back. Let's talk commodities now. Manisha is joining in and she's focusing in on Bitcoin. Manisha, why is that?
Well, that is because we've seen very strong gains in the overnight market, and Bitcoin, with where it's trading right now, very close to 71,000, is just 3% away from its all-time highs of around 73,700 that it hit in March in previous year. But the gains have been very strong. One, there's a lot of short covering happening. Second, there's a lot of inflows when you look at Bitcoin ETFs as well in the global markets. When you look at the last 12 months or so, many of these cryptocurrencies actually have done quite well. In the US markets, depending on who comes, they have been in favor of cryptocurrencies. We've seen positive cues come in from Europe as well, and that clearly has been supportive, the rally in many of these cryptocurrencies there. So when you look at the last 1 year, Bitcoin prices have gained up by more than 105%. There's been a 160% jump in sense of Binance, and the best of gains clearly coming in for the platform Solana, which is gained up by 400%. Ether, which is the second largest when it comes to market capital within cryptocurrencies, also has jumped up by 45%. So very strong gains coming in across cryptocurrencies in the last 1 year as well. When you look at the inflows itself into the market, well, it has been 47,000 Bitcoin in 2 weeks is what we've sensed in sense of ETFs there. The upcoming US elections is going to be quite important, as I said, and that would tell you on whether or not and what kind of regulations do we see coming in for this one. But October as a month has always been positive. When you look at the last 20 years, out of that, 17 years have given you positive returns in the month of October for Bitcoin there. For this year as well, we've seen nearly 10% of gains already happen in the month of October, but as you can see, it has been very, very strong months there. 2023 in sense of October was 28% of gains. So as you can see, it has been very strong always every year for the month of October that you see gains coming in, and that's exactly what we are witnessing right now as well.
Okay, so deja vu, that's what we are witnessing. Thank you so much, Manisha. You know, I thought you'll talk about gold, but Bitcoin has its own story today. But thanks a lot for joining us with all those details. That's about the commodity space and the moves in the Bitcoin market. But Gillette is the other stock on our radar. It's surging in trade after reporting its Q2 numbers. Among them is here with the details and the internals. Manglam.
Well, you know, the last many quarters, the company has been on a steady expansion of their portfolio, premiumization, increasing their distribution. It's now beginning to show in results, even if the trends suggest that people are preferring beards more than a clean-shaved look. So you have 17% revenue growth that has come by on Gillette. Benign steel prices have actually aided their gross margins along with premiumization. The EBITDA has jumped 38%, and as a result of which the net profit has actually seen a surge of 43%. Remember, the EBITDA margin expansion from 20% to close to 24.5% has actually been diluted by their oral care business. Grooming business, which includes you know, the razors, etc., saw 23% revenue growth. There the EBIT growth was 67%, near 850 basis points margin expansion out there. On the oral care side, there was a near 600 basis points margin dilution. So that's why, you know, it was diluted. The core business, the grooming business, has done extremely well, led by increasing distribution, female grooming range, and increased traction in premium products as well. Remember, last month itself, the company had held an analyst meet, and they said that they've increased their distribution by 1.5 times over the last 3 years. Margins have improved by both cost savings and premiumization. Male grooming, which is a 33 billion rupee category, is growing fairly well, and they've had the highest ever market share that they've had in their business itself. On the female grooming part, you know, Venus has doubled sales in the last 5 years and now contributes double digits to the company's grooming sales. So that's another important growth driver coming in. And they expect mid-single digit growth in oral care to continue, led by some of the lower end electronic toothbrushes, etc., that they're launching. So oral care is something more of a second half story, but grooming is doing extremely well, largely because of the drivers that they put in place over the last many quarters.
Thank you very much for that. But let's get back to more earnings. And we've got a management waiting by LG Balakrishnan. That's the company on our radar. They've seen a profit growth of 4%, while the top line has seen an increase of 8%. B. Vijay Kumar, Chairman, Managing Director of LG Balakrishnan, is with us on the show now. Thank you very much, sir, for joining in, and season's greetings to you. In the first half of the year, your revenues have increased approximately about 8%, 1,230 crore for H1. Now, your target for the full year is 2,500 crore. Are you on track, or do you think the second half could be better than first half and you will be able to exceed your FY25 top line guidance of 10%?
My Diwali greetings to all of you and to the viewers. Yeah, we expect the next quarter to be even better.
Okay. And what about Q4? Do you have any visibility for Q4? And for the full year, FY25, what could you end the year with, sir, in terms of revenues?
We are targeting what we originally targeted. We will reach 2,500 crores.
Okay. So just wanted to understand how the demand is currently. When you say second half will be better than first half, or quarter three will be better than quarter two, how much better is the demand both in your export and domestic markets? How much is export as a percentage of revenues currently?
The export is stagnant. It will continue to be stagnant. We have a lot of headwinds in export. That's because of shipping, premium shipping, and a lot of difficulties in the shipping part of it, plus the time schedules. So we will continue the export at the same level. It will still be at about 10% of our turnover.
Yes. So are we seeing a decline in export growth because of all the reasons that you mentioned? Are you seeing delay in shipments, a delay in orders as well?
Some customers are delaying their orders. They would like to buy within their own countries. Yes, there is a lot of headwind, but we have some good customers and we think we will be able to maintain the same turnover.
So the problem with export is logistical issues and also some demand softness, correct?
Demand softness is because they would like to have some kind of a dependable sourcing instead of depending on successful shipping and stuff. So
Got it. Okay. Sir, margins have dropped in the current quarter to sub 17%. In the past, you've spoken at 17% as being the anchor on the margin front. What led to the margin drop in Q2? And do you think by the end of the year, on an average, you could get back to 17% margins?
Yeah, we will maintain that 17%. We were actually at 19%. We are now at 17%.
So this year you will do margins of 17% for FY25.
Yes.
Okay. So, you do have new facilities which are coming in, and you had indicated that it will do revenues of around 100 to 125 crore rupees by the end of this fiscal. First, is this guidance on track? Second, what is the current capacity utilization that you're looking at?
I didn't get your last part.
The new facility, sir, has it already started? What is the capacity utilization there? And this year, will you do revenues of 100 to 125 crores from there?
Yes, we hope to do that. We will do about 100 crores, if not 125. We've already done about 12 crores, which is included in our turnover from both the steel unit as well as the industrial chain unit. So yes, we will reach that 125.
And the peak revenues from this facility, how much would that be, sir?
Ma'am, that depends upon our investment in the next year. We may slow it down because of conditions. As I said in my last interview, Europe is very sticky. So it depends upon how successful we are in breaking the market in Europe, which means then the turnover will increase.
Okay. So you get about 80% of your revenues from the domestic two-wheelers. Analysts point out that, the company's revenues could be vulnerable due to impending electrification of vehicles, although the penetration is not very high right now. But, I think your presence in EV is slightly lower. So can you tell us what your EV plans are?
We have plans to get into the electronics side of the business. So it's going to be a slow entry into it. We are hesitantly looking at some possibilities. You know that we have invested into a company which is into electronics. So over a period of time, I can answer maybe a few quarters later about how successful we are in that line.
Okay. All right, we take your point, sir. Thank you so much for joining in today and speaking with us about your Q2 numbers and the outlook going forward. And festive greetings to everyone at the company as well. With that, we will do one thing. We'll slip into a break, but a small programming note as we do that. As we prepare to ring in the festivities this Diwali, tune into CNBC TV18 at 2:30 p.m. today to hear out the biggest of market voices giving their tips on how you can make your portfolio prosper this Diwali.
Welcome back. Trying to get towards that 24,200, but still down close to about 150 points. Mitesh is now with us for a quick tech check on the markets. Mitesh, not quite the day that morning that we anticipated, but how would you trade the Nifty now or the Nifty Bank, where you are seeing some resilience, and your top calls?
See, it is the Bank Nifty which somehow has managed to hold on to things, but Nifty is slightly on the shaky ground. I'm actually thankful that the Bank Nifty is keeping the Nifty above this 24, 170, 150 mark. If that breaks, then we'll take some short position. But for the time being, trading with a mixed bias. City Union Bank is something which I've recommended earlier as well. If somebody doesn't have it, even now it's a buy. Keep a stop at 171. Look for targets of 182, 183 to begin with. And Cipla, I think after a kind of a pullback yesterday, is tapering off again. So sell here with a stop at 1475 for targets of 1410.
Okay, all right. Cipla also in focus on the back of numbers that the company will report today. Thank you so much, Mitesh, for joining in. So that's a technical check on the markets. Now we'll slip into a break, but when we come back, we'll discuss Indian Bank's Q2 performance with the company's MD and CEO, Mr. S.L. Jain. Stay tuned for that.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC TV18.
Welcome back. You're still tuned into Trading Hour. Indian Bank reported a strong set of second quarter numbers. It reported an improvement in the asset quality, while the net interest margins came in under some pressure on a quarter-on-quarter and on a YY basis. To discuss the company's Q2 performance, we have with us Mr. S.L. Jain, the MD and CEO of Indian Bank, joining in now. The stock is up 3% at the day's high in a weak market. Mr. Jain, good morning. Thank you so much for joining in. Well, it's a strong set, but if we talk about the NIMs, they've come in under a bit of pressure, 5 basis points down on a sequential basis. Can you explain what happened here, and do you stick to your net interest margin guidance of 3.5% that you had given earlier? What's the outlook on cost of funds as well?
So good morning. Happy Dhanteras. You see our net interest margin has come down from 3.44 to 3.39. And you know, because of the RBI guideline, the penal interest has been booked as a penal charges. The impact of that is 6 bips. So if you add a 6 bips, it is 3.45. So we, in the beginning of the year, we said that we will be having a margin of 3.41%, and we are stick to that margin. We will be having better than this. If you see the quarter on quarter, the cost of deposit has increased by 8 bips, but bank could be able to maintain the yield on advance also by 8 bips. So we are protecting our margin. And one more reason is that we are growing in a RAM segment, which is giving good margin and at the same time maintaining CASA above 40%.
Okay, so maintaining a NIM guidance of 3.4% for the full year. Mr. Jain, morning and season's greetings to you. Can we talk a bit about your slippages? Because your slippages have come down sharply on a quarter-on-quarter basis. What led to that? What could be the guidance on slippages for Q3 and Q4? Will it be similar or could you continue to moderate? And therefore, what could the slippage ratio be? Can it come down to levels of 1.25% and your guidance on recovery too?
Slippage was 1.06%, 1,357. Yes. And slippage has come agri side 680 crore and then the MSME. The slippage increases when your collection efficiency is down. You see my collection efficiency, we are maintaining it 95%. So collection efficiency is continuously same. So going forward, naturally the slippage will come down. And you see on a quarter basis, it has come down from 1,900 crore to 1,300 crore. One more point here is the recovery. At the beginning of the year, we said that our recovery will be between 7,000 to 7,500 crore. Internally, we decided that we have a 2,000 crore of a recovery per quarter. We are having a recovery of per quarter 2,000 crores. So in a half year, you see we are close to 3,958.60 crores. And you see our trend also. This is a bank continuously performing. Continuously, our recovery is more than the slippage. Last year, you see. Prior to that also you see, and quarter on quarter you see. And because of that, our gross NPA has come down, net NPA has come down, PCR has improved.
Okay. So slippages were nearly 4,000 crore in the first half of the year, approximately. So for the full year, can you do 8,000 crore?
No, slippage in the first half is...
Sorry, I mean recovery.
Recovery, we said 7,000 to 7,500. Generally, we do better than what we guide.
Okay, and the slippage ratio, will that be between 1 to 1.25% this year then, sir?
Yeah, it should be. It should be in the range of around 1%.
All right. You know, your fee income was robust. Can you explain what was the reason for that? And is it something that you can sustain in the second half as well?
The fee income has grown by 11% and fee income has grown by because of the transaction charges, because of even the PSLC income has increased for the bank, which is around 8 or 9%. All our other incomes are increasing, digital transactions incomes are increasing. So you see the bank continuously 10-11% growth we are having.
Okay. You've given a guidance of 11 to 13% for advances and 8 to 10% for deposits, right?
Right.
So this 11 to 13% advances, can you provide some color from where it's coming?
We said 11 to 13% and we have grown by 12%. If you see our growth, we have grown 14% in RAM. Retail, we have grown by 15%. Agri, we have grown by 16%. MSME, we grown by 8%, but standard MSME, we have grown by 12%. You see the MSME NPA has come down. Likewise, in corporate also, we grown by 9%, but the standard corporate, we are growing by 11%. So all segments, we are growing in double digit. Even in the retail housing loan, we are growing 14%. Auto loan, we are growing 51%. Jewel loan, we are growing 21-22%. So bank is growing in all segments. And that is why we are confident of achieving 11 to 13% of a credit growth.
Okay. All right, Mr. Jain, thank you so much for joining in today and giving us your take on what happened in Q2 and most importantly, what the outlook is going forward. The stock is higher in trade today and we would like to wish you and the entire team of Indian Bank a very happy Diwali. With that, we'll do one thing. We'll slip into a break. But as we do that, CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.
Welcome back. Bharti Airtel is a stock which is subdued in trade. That's down more than about 2.25%. And the key reason is, despite strong numbers, operationally a good quarter, there is a leadership transition which is announced. Now, the current CEO is Gopal Vittal, and he's going to take on a higher responsibility. He's been appointed as the vice chairman, and the current COO, Shashwat, will become the CEO. But there is a one-year transition from the time that, Gopal Vittal, who is the current CEO, hands over the reins. So Shashwat will be the CEO effective January of 2026. But since the company's done so well under Gopal Vittal, clearly there is some skepticism on how the new leadership will be able to take on this growth leadership mantle that the company has shown in the telecom sector. But moving on now to the sidelines of the World Bank's annual IMF meetings, my colleague Malvika Jain caught up with Ajay Seth, who is the Secretary of the Department of Economic Affairs, and they discussed a wide range of issues, one of them being generating enough opportunities for the people of India, including job creation and other focus areas. Listen in to what he thinks the government of India should focus on.
A job gets created when the investment happens in the economy. Of course, there has to be right skilling.
Sure.
And at the moment, World Bank and Asian Development Bank are working very closely with Government of India to put together the scheme which Finance Minister announced in the July budget, a major skilling program in partnership with the states and the industry. And both these banks are working with the Ministry of Skill Development in India to put together a good program based on their global experience and, of course, what is needed by Indian economy. So jobs get created through the investment into the economy. And which are the investment areas possible? One, of course, is on the connectivity side, on infrastructure side, on climate mitigation coming through the energy transition, which is a global public good as well. So these are the areas where discussed it, and also discussion happened around that how the private capital can be mobilized through leveraging banks' financing.
Sure. And so for private capital mobilization, were any particular sectors identified, or that would also be at a macro level? And then
no, I mentioned it like about
infrastructure.
Infrastructure, and within infrastructure in particular about connectivity. And India has invested very significant amount in the last 7-8 years in terms of its road infrastructure, ports, airports, railways. These are the potential areas to attract private capital to supplement or to complement what the government systems are doing. In addition to connectivity, then comes the entire energy piece. The way India has been investing to renewable energy, the transmission lines, that is the second set of areas which were identified. Then, of course, there are other areas like urban infrastructure, which is a more complex sector, but that is also on the table.
And you can catch this very interesting conversation all day today only on CNBC-TV18.
Welcome back. We've climbed now above the 24,200. So at least between 11 and 12, we've seen the Nifty pick up by close to about 40 points. We were down 150 and now we're down 100 points. But autos remains the top sectoral loser, down 2%. And Maruti Suzuki will be reporting its earnings today. Sudarshan joins in with the key expectations. Sudarshan.
So the shares of Maruti Suzuki had hit record high after reporting its first quarter of earnings. And since then, the stock is down almost 20%. And for Q2, we are expecting a subdued set of earnings. Revenue is seen flat, operating profit is likely to fall 2%, and margin may hold the levels about 12%, but may see a minor fall. And this subdued expectation is on the back of no major growth in volumes. In Q2, volumes were flat year-on-year, while on a sequential basis, volumes were up 4%. So the question is why the volumes have been under pressure in the recent past. First, demand has been below expectations. And even the concerns regarding demand has been raised by a few companies post Q2 earnings like TVS Motor and Bajaj Auto. Second is raw material costs have seen a sharp rise in the last 2 to 3 months. And last reason, there has been lack of major launches by Maruti in the last 2 to 3 months. And on the back of these, we see a muted set of earnings. But more than the numbers, what would be in the focus is the commentary by the company post earnings. And we would like to hear on the festive demand. Second is update on inventory levels, as there have been reports making round of high inventory levels in the sector by all the companies, and last will be the launch pipeline. So on the back of these reasons, we are expecting a muted set of earnings from Maruti.
All right. Thank you so much, Sudarshan, for joining in with what to expect from Maruti. But the other stock in focus will be Cipla. That will also report Q2 numbers today. Winnie is here to get us the key expectations. Even that stock is under pressure. Winnie, what are we expecting?
Yes, so there is a couple of news flows while we're watching out for the numbers. First, let me take you through that in terms of what is the expectation. A 5% growth in terms of revenue, muted growth there. Margins expected to be flattish, 26%, and last year also at the same level of 26%. Profit, 11% growth. This time, India business, that's expected to see a high single-digit growth, expected to come in at around somewhere 3,000 crores. While US sales, that is expected at $235 million. So keep an eye out on that. That accounts for around 28% of the total sales revenue contribution for Cipla. So sequentially, when you look at it, US sales may be a bit muted because of certain issues that were there on lanreotide drug sale, and that was because of inventory stocking that we saw in Q1 FY25. South Africa sales also expected to see a flattish growth, around muted growth of around 7% is what we could say. While management has given a commentary last time of around a 24.5 to 25% in terms of the margins, EBITDA margins. So we'll keep an eye out on that commentary and outlook going forward. Let's also watch out for market share gains in licensing opportunity from the company and progress pipeline for inhalation and assets in the US generic market share. How is that shaping up is key to focus on. Now, like I said, there's another news flow that we're watching out for is that lanreotide, which is a drug which was made by Cipla. Now, we have understood that Ipsen has confirmed Sun Pharma launching lanreotide in June 2025, and lanreotide is an important drug coming in for Cipla. That is why Cipla is under pressure today as well, because now there's competition that is coming in the US markets. And for Cipla, I think around the contribution that came in from this was $120 to $130 million for revenue in terms of US sales. So competition increasing is also going to be a key focus area. We'll try getting some commentary from that as well.
Okay, thank you very much for that. By the way, Sirma SGS Tech is clearly the star over the last 2 days. In 2 days, the stock has added on close to about 25-30%. And Vari Energies, the listing of yesterday, closed up with a gain of 55%. And today it's added on another 5%. Come off a bit from the highs, but still going strong on day 2. But Federal Bank has also clocked in a very good quarter. Gross NPAs have hit a 37-quarter low. Abhishek joins in with the details.
Well, it's a good quarter for Federal Bank, especially with respect to the fact that their asset quality has been pristine and one of the best that you are seeing with respect to slippage ratio at 15-quarter low and asset quality, that is gross NPA ratio at 37-quarter low. So to begin with, net interest margin has declined by 4 basis points sequentially on account of penal interest that they have been charged. So it has come in at 17-quarter low of 3.12% versus 3.16% in the previous quarter. Gross NPA ratio is at 37-quarter low of 2.09% versus 2.11% in the previous quarter. The annualized slippage ratio is one of the best in the banking sector at just 0.75%, which is a 15-quarter low. So if you take a look, their operating profit growth of 18.2% YOY is perhaps one of the best that you are seeing in last 5 quarters. With reference to the PNL to ARPOL, the NII was slightly below ARPOL. However, the PAT is 6 to 7% ahead of ARPOL. In terms of brokerages, they remain bullish. Citi has a buy recommendation. UBS has a buy recommendation. Again, Nomura also has a buy recommendation. Target price ranging from 230 to 250 per share. Back to you.
Thank you very much for that. As we pointed out, the Nifty has cut some of its losses. So now we're down 100 points. At the start of the show, we were down 150 points. Some of these life insurance companies like HDFC Life and SBI Life, they're batting for the bulls and the recovery continues there. So both these stocks are up close to about 1.5%. HDFC Life has moved to the highest point of the day. IndusInd Bank, it's been a rough week for, last week was a rough one for IndusInd Bank. But today it's trying to recover. So it's a stock which has come off nearly 2.5% from the day's low, even as it deals with a 1.5% cut. Well, IndusInd Bank is the one we were referring to. Well, with that, it's a wrap on Trading Hour. Thank you for watching. Halftime Report is up next.